The UCLA women's basketball season is one you don't want to miss. Your top 10 Bruins are well on their way to another Final Four run. We need you to get to Pauley to support this incredible team. Led by Lauren Betts, Gabriela Jaquez, and Kiki Rice, newcomers Gianna Neepkins and Charlize Ledger-Walker. This group plays an exciting brand of basketball and wins. The time is now to come to see these stars in action. Big-time matchups are coming. Go to UCLABruins.com/tickets to secure your seats today. Can't wait to see you in Westwood cheering on the Bruins.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after the Guy Benson Show at 3 and just before the 790 KBC News Blitz with Randy Wang. And right now, you got Motec on Money. We're live on the air, 790 KBC, streaming live online worldwide at KBC.com. And your on-demand Motec on Money podcast, KBC.com, Apple iTunes, YouTube, all of your favorite podcast platforms. What a week. Stocks rebounded today from rough week on Wall Street, especially when it comes to the tech names. Wall Street reassuring the markets today, though, a bit, and reassessing concerns about the impact of AI disruptions. We did see NVIDIA roar back to life today with $13 at 185 and change. But it was the blue chips that led the parade today, with the Dow closing up 1,207 points, settling above 50,000 for the first time, 50,116. At the closing bell. The S&P 500 up 134 to 6,932, and the NASDAQ at nearly 500 points, up 491 at 23,031. Get the Dow 5K hats out today. After today, the Dow closing above 50,000 for the first time. For the week, the Dow managed a gain for the week. The S&P 500 also posted was pretty much at the flat line. The NASDAQ did post a loss for the week. Wall Street ending the week with this bounce back as big tech CEOs and analysts brushed aside concerns about the impact of new AI tools on tech. Let's see. The Dow ended the week with a gain of 2.5%. The S&P 500 and NASDAQ actually closed the week slightly in the red. Some of the biggest tech names led the charge today. As I mentioned, NVIDIA moving higher by more than $13 at 185 and change. Also, Broadcom and Tesla posted decent gains. Amazon, however, tumbled 7%. Cryptos, of course, have seen a wild week, the wildest week probably ever, with Bitcoin kissing 60,000 today. Now it's around 70,000, losing about half of its value since the all-time high, which was achieved last year of 126,000 or so. Silver and gold also in the spotlight this week, all over the place. Gold has ended the week just shy of 5,000 at 4,988 and change, up nearly $100 today. Silver has settled at 73 an ounce, up 81 cents. The price of oil also in focus today, right now hovering at around $63.50 a barrel. The oil market flashing a warning sign about elevated risk of a U.S. military action with Iran as the weekend begins. It's also Super Bowl weekend. We have the Super Bowl indicator as well, which we'll take a closer look at too. And in the car business, Stellantis warning it'll take a charge of $26 billion and it'll plan to scale back its electric vehicles. Shares in Stellantis, which among other things makes Jeeps, tanked more than 20% today. Looking ahead, we'll get the closely watched January jobs report, which was supposed to have come out today, but because of a government shutdown has been delayed now till Wednesday next week. Joining us live now on this big day is top-ranked money manager Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call on this epic day here, and it's what's followed with the Dow above 50,000 for the first time. Good afternoon.
Well, how about that, Frank? Dow 50,000, but there is the curse of round numbers. We've seen this over the many, many years. Dow 100 was hit in August of 1922, and the market stayed within a range of 100 for nearly 20 years. Dow 1000, you and I are young enough to remember Dow 1000. That first occurred in January 1966 and traded around 1,000 for some 17 years. We first reached 10,000 when Rudy Giuliani was still mayor of New York City. The Dow stayed at 10,000 for 10 and a half years. Those big round numbers, it's probably psychological, but when you factor in the dividends that are paid out by these companies and the reality about dividend growth, that the earnings grow and are passed along in the form of dividends, it's not so bad. So here we are at 50,000. We went from 1,000 to 50,000 over some, 40, almost 50 years. It's not a bad return when you include the dividends. It's about 10% annually.
Well, certainly the Dow is the star of the day today with a close above 50,000, but also the tech names are roared back to life. The S&P 500 also had a good day after what was a tumultuous week. And then there's the precious metals where it's not boring anymore. We talk about gold, silver, platinum, and palladium, right? What do you make of the commodity moves we've seen this week?
Well, the commodities have really been saying very loudly that there's concerns about currency devaluations, there's concerns about instability, but more than anything, there are concerns about shortages of memory and data chips, which require a lot of these metals, in particular silver. And then there's palladium, which you mentioned. 80% of the palladium is used in automobiles, specifically hybrids, which is a growing market. Silver, which I've certainly liked over the last 5 years and has performed well, but it's been the subject of more violent price swings, certainly more violent than gold due to its smaller market and its very limited liquidity. The old orthodoxy, Frank, has been that gold and silver function as hedges against risk, but based on the recent moves, and this is the most volatile silver and gold price range that we've seen since 1980. So we're questioning the old rules. They might be changing, but gold has certainly done pretty darn well. The central banks still accumulate it.
That is amazing, and of course you have the digital gold moves as well, so-called, and that name is being questioned quite a bit following these moves, with Bitcoin tumbling to 60,000 today. Now it's back to around 70,000. Give us your reaction to the unbelievable moves we've seen in crypto this week.
Well, I'm not sure what to think about cryptos right now. Since the so-called Genius Act was enacted in July of last year, which gave the government a seal of approval for the use of what are called stable coins. These are backed by treasury bills and other high-quality liquid assets. But the stable coins eliminated the transaction demand for Bitcoin, and so Bitcoin hasn't been a good store of value. There are concerns now that with Bitcoin falling, that might trigger a sell-off in gold and silver. But I don't know. The banks are requiring it because they want to play a role. And I wouldn't give up on the cryptos here. I'm just saying it's a bear market. I tend to get out of the way rather than try to catch a falling knife.
All right, we saw Michael Saylor's stock strategy take a huge hit recently, but looks like he's still committed to Bitcoin, buying the dip, and then the Ethereum guy Lee hanging in there with BitMine. That stock has also taken a hit. By the way, I'm buying the dip, the guacamole dip, heading into the weekend for the Super Bowl parties here, but it looks like those guys bought the dip in the cryptos. What about these equities tied to cryptos, which are sitting on tremendous unrealized losses by these two guys, and of course probably a lot of realized losses out there by Mr. and Mrs. Southern California?
Well, I think the banks are pretty happy about this because the U.S. dollar-backed crypto tokens, the stable coins, have been a real threat to banking stability. That they could pull, according to the numbers I saw, about $500 billion in deposits out of U.S. banks by the end of 2028. That's a big threat because there's ease of trade, and if the government gets behind stable coins, well, then it'd be very, very easy to transfer your capital into stable coins from the bank. So I don't think this thing is over.
On the air live with Gabriel Wisdom with American Money Management. And what about oil, which has been bouncing around this week with a lot of uncertainty happening with the nervousness in the Middle East as the U.S. Armada seems to be getting bigger around Iran. It looks like they had some talks today about their nuclear program, and Iran's trying to hold on to their nuclear program. In all this, the oil market's getting a little bit more nervous, it looks like. Gabriel Wisdom, but what do you see ahead on that front?
Well, I think President Trump's Monroe Doctrine revival and Iran's massive armada creates some real tail risks, specifically for oil. We could see oil spike to maybe $100 a barrel if this gets out of hand. Iran, after all, is a member of OPEC, a major player in the global oil market. They produce more than 3 million barrels of crude a day. This military conflict would mean a flight to quality, probably be in U.S. dollars and treasuries, and maybe reduce interest rates be here. The U.S. oil companies have developed a Venezuela reserve, and that might mean an oil glut. When there's too much oil, it's not. It's good for the consumer in the short run. It's not really great for the economy.
All right. What about the oil stocks, which appear to participate in today's epic rally? We're speaking on a day in which the Dow closed above 50,000 for the first time. If you're just joining us on the air with Gabriel Wisdom with American Money Management, author of Wisdom on Value Investing, the Dow closing up more than 1,200 points to 50,116. The Nasdaq up nearly 500 today, and the S&P 500 up 134. Looks like the oil names are the big ones I see here. ExxonMobil posted nearly a $3 gain to 149 and change. Chevron up nearly $2 at 180 and change. What about the oil stocks here now?
Well, I like them, Frank, and one of the reasons is that companies like Stellantis, who make Jeep, Chrysler, Dodge automobiles, they've not thrown in the towel, but they've conceded that they were wrong about EV demand and converting to this so-called energy transition. They overestimated the pace of it, and so they've lost a great deal of money. And so the oil companies are suddenly in favor. Hybrid, I think, is the word going forward here, where it's a combination of traditional energy and electric.
We're going to be speaking to Lauren Fix, our go-to car expert, about this Stellantis later this hour, and that big news you mentioned with this big write-down as Stellantis now shifts gears on the EVs, as did Ford and GM already did, taking enormous hits as well. Stellantis stock lost more than $2 today in an otherwise very big up market to $728. Would you touch any of these auto names as this EV shakeout continues?
Well, I'm certainly watching them. Everything on Wall Street eventually goes on sale. It's just the nature of markets that are liquid. Human beings tend to run in packs. We have a herd instinct. And Stellantis is a very, very real company. They can afford to take the loss. They won't be paying any dividends. But I wouldn't give up. I'm not saying that the shares are worth $7. I've got to do an actual balance sheet financial statement analysis to determine what the intrinsic value is. But I'm looking at the symbol as STLA.
All right, let's talk about those tech names, which were all over the place this week on AI news and concerns. NVIDIA ended the week with this nice bounce back of more than $13 at 185 and change. Apple higher by a couple of dollars at 278 and change. And Tesla, we should also mention that one up nearly 14 at 411 and change. What about the Mag 7 group and NVIDIA and all this drama around the tech names this week?
Well, the Mag 7 hasn't been leading the markets, and that's because there was such outsized performance over the last 5 years. These were remarkable companies, very, very rewarding for shareholders. They drag the entire market indices higher, but there's a bit of fatigue there, and there's a depreciation time bomb, and this is especially specific to NVIDIA. It's a big threat. The GPUs could become obsolete in 2 to 3 years, not in 5 to 6 years, over which they're depreciated, which means current earnings are significantly overstated, and the so-called CapEx boom, spending all this money to build data centers and buying NVIDIA chips, it could be a ticking time bomb. That's what we saw yesterday and through the week. It was Anthropic that introduced a new tool that automates legal work by reviewing contracts and so forth. That spooked the market. And then today, Goldman Sachs said for their banking division, they've teamed up with Anthropic to introduce AI bank tellers. So things are changing pretty rapidly here.
Isn't that something? I see Goldman Sachs was among the big winners among the Dow 30, which helped propel the Dow more than 1,200 points to close above 50,000 today. Caterpillar also a winner. Anything else that caught your attention among the Dow Jones Industrials, and including some of the biggest names that we just mentioned here?
Well, Frank, we're seeing rotation. The bull market is broadening, and so these are the names that have caught my attention, and other professional money managers around the country. There's a so-called Dow theory that it tells us that when the industrial companies, the companies that make this stuff, and the transportation companies, the companies that deliver the stuff that the industrial companies make, when they're trading at or above their old highs. And right now, the Dow Jones Industrials and the Dow Jones Transportations are at record highs. When that happens, it signals more growth ahead. So Dow 50,000, it's not too surprising, and some are saying 70,000 by decade. And that it sounds terrific, but it's certainly less than a 10% annualized return. I think it's realistic, though.
On there live with Gabriel Wisdom, and zooming out to the big picture, as we've discussed here many times, the stock market is said to be a forward-looking mechanism. Are we in the roaring 20s again here now? What is the market seeing that in the face of a lot of nervousness nowadays?
Well, the market is the result of the we rather than the I, and the old saying is the we is much smarter than the I. The baby boomers, those of us aged 62 to 80, hold some 51% of all the household wealth, including, I'm told, some $27 trillion in stocks. And the bull market provides a big wealth effect, which enables baby boomers to keep spending, even if payroll income is weak or they're retired or forced to retire. So that's one very, very positive. And then the labor market, and I know the Federal Reserve is quite focused on this. We heard from some of the Fed governors today, Frank, but contrary to the no hire narratives, the hires, there was some 5.1 million hires, they're matching separation. So we have a balanced labor market, not a weak one. The JOLTS opening to unemployed ratio is very stable. We're going to get some jobs numbers next Wednesday, but my forecast is higher.
Have you ever seen this kind of volatility in the precious metals, for example? And of course, crypto's notoriously volatile, and been all kinds of ominous predictions or comments or analysis, if you will, on some of your people are saying Bitcoin's going to go to zero and all this after all these wild predictions on the upside. Maybe you can synthesize for us this unusual volatility here, not so unusual for cryptos, of course, but the unusual volatility in the precious metals and the market this week, and then the outcome being this huge rally today.
Frank, I think history provides a lot of guidance here. The midterms, I've always, I can't think of a single exception. There probably are some, but not in my memory. But midterms are very, very difficult for financial markets. They're also rough on presidents. I'm not sure why. I guess after 2 years, any high-profile scandals, or we've had inflation, the cost of living goes up. There's the immigration border conditions. There's foreign wars. There's global instability. Whatever. It happens pretty much all the time. The data I saw takes us back to 1934, and presidents of both parties in 20 of 23 elections, presidents of both parties lost an average of 27 seats in those elections. They lost the majority. So presidential approval ratings, it's useful, but it's certainly imperfect. JFK, for example, lost 4 seats in 1962 with a 61% approval rating. So it's just the midterm madness. That's what we're experiencing.
All right, and we got the Super Bowl weekend here. There's that Super Bowl indicator for Wall Street, right? Looks like that says if the American Football Conference team wins, in this case the Patriots, then it'll be a bear market or a down market for the rest of the year. But if a team from the NFC, in this case the Seahawks, wins, it will be a bull market, an up market. And last time I checked, this has about a 75% accuracy rate. Who are you rooting for? Let's put it that way.
Well, I'm a Seahawks fan, but this was a joke in 1978 by a prominent sports writer back in the day. He came up with this Super Bowl indicator, and because it's worked, over 70% of the time, it's very, very sticky. Should you trade or make any decisions based on it? No, but I think this is going to be a great game on Sunday.
All right. Any specific places where you are putting money now and/or taking off the table?
Well, Frank, we talked about Stellantis shares. I'm certainly no buyer there, but it got my attention. Anytime a whole sector goes on sale, like the auto industry appears to be doing, or EV demand has spooked the car makers or caught them off guard, I'm looking. There's the exchange-traded funds that give you some exposure to autonomous electric vehicles. There's the Global X. The symbol is DRIV, drive. I like the materials. There's the Global X lithium and battery technology ETF, symbol LIT or lit. And finally, since 80% of the palladium usage is autos, and the hybrid theme is really catching on, I like the Aberdeen palladium, the physical palladium exchange traded fund, symbol PALL. I haven't bought it yet, but it's on my list.
Terrific. Gabriel Wisdom with American Money Management, and author of Wisdom on Value Investing. Gabriel, thank you very much for taking the call on this record-shattering day, and we wish you a great Super Bowl weekend.
You too, Frank. Thanks.
Thank you very much.
What would you do if your online store converted 36% more shoppers? You could take 36% more vacation.
Another pina colada? Yes, please.
Open a new retail location with 36% more square feet.
Fantastic.
Hire 36% more help.
You're hired and you're hired.
Shopify has the world's best converting checkout, up to 36% better than other e-commerce platforms. What you do with those extra sales is up to you. Switch to Shopify today at shopify.com/listen and get a $1 trial. Shopify.com/listen.
The UCLA women's basketball season is one you don't want to miss. Your top 10 Bruins are well on their way to another Final Four run. We need you to get to Pauly to support this incredible team. Led by Lauren Betts, Gabriela Jaquez, and Kiki Rice, newcomers Gianna Neepkins and Charlize Ledger-Walker. This group plays an exciting brand of basketball and wins. The time is now to come to see these stars in action. Big-time matchups are coming. Go to UCLABruins.com/tickets to secure your seats today. Can't wait to see you in Westwood cheering on the Bruins.
Start your day with the morning jolt of Drake C. Toll.
You've never been a football coach before, so you're not allowed to talk about this. No, I can have burnt mozzarella sticks and say the chef's not working.
Then Black and Abdallah.
Adam Abdallah.
That's what we do. We rank quarterbacks.
Fired.
Okay.
And Westwood One Sports Night caps it all off.
I don't know how they're going to win, but they're going to win. We're open all night here on Westwood One.
Westwood One Sports Talk. Follow and listen on your favorite platform.
Motec on Money continues here in 790 KBC. Good afternoon. Stock market rallied to close out the week with the Dow closing above 50,000 for the first time. Get the 50 Dow 50K hats out with the Dow closing on more than 1,200 points at 50,116. The S&P 500 of 134 at 6,932. The NASDAQ of nearly 500 points at 23,031. The yield in the 10-year note now at 4.21%. Auto stocks really did not participate in today's rally, especially Stellantis, closing down more than $2 at $7.28. Later this hour, we'll talk more about the car business with our go-to car expert, Lauren Fix. Right now, Trump accounts will play a bit of a role in the Super Bowl this weekend. They're going to get a lot of attention, as is everything, of course, during the Super Bowl. And joining us live now is Grover Norquist, president of Americans for Tax Reform. What a week, Grover, including that government shutdown, which is now ended, and the stock market at record highs. A lot going on. Thank you very much for taking the call this afternoon.
Absolutely. Good to be with you.
Wonderful to be with you. Tell us what we need to know about the Trump accounts. I understand one of the commercials that's scheduled to be playing there this weekend on Super Bowl Sunday is something about the Trump accounts. So tell us about that.
Absolutely. I saw it. It's a great commercial. One of the little noted pieces of the One Big Beautiful Bill was Trump accounts. And that is that for the next 4 years, including last year, 25, 26, 27, 28, 4 years, if you have a child, if you're American citizens and you have a child in any of those 4 years, each of those 4 years, the federal government will put $1,000 into a 401k, an individual retirement account. This is specifically a Trump account for your child each year, each of those 4 years. Now, that's a starter kit because parents can put $5,000 into the child's account, and the child's account will build up until they hit 18, and then it will turn into an individual retirement account. But you're going to have an entire generation of children who are growing up, becoming 8, 9, 10, 11, 12, and looking at an account that is theirs, that grows. And you mentioned stock market hit 50,000. Well, if you never had any stock or thought about it, that doesn't mean anything to you. But if you have any amount of stock at all, you realize that when the stock market goes up, your wealth increases. When your stock market goes down, your wealth, your life savings goes down. You are a different person. When John F. Kennedy was president, 10% of Americans owned shares of stock. Today, it's 63%. Remember, it used to be on the Monopoly game, the little guy with the top hat and stuff, and those were the guys who had stocks. Now it's more than half the country owns stocks directly. And now we're going to start with a generation where the government for 4 years will put $1,000 in for each kid, and parents can put in $6,000, and companies can put in money into your child's account as a benefit, like dental or healthcare or parking. And that is not taxable to you. It's not taxable to the kid. It's tax deductible for the company. It's a benefit. You don't pay tax on it because you don't have it. You gave it away. And we've already seen many significant large companies did a press conference with President Bush saying, we're going to be doing this. This is going to be part of our benefits package. And then there's one other piece to the puzzle, and that is that foundations can give an unlimited amount to anyone who has one of these accounts. You have to go set the account up, and I think about 1 million people have started the process to do that. It starts in 4 months from now, in July 1st of the year. And you saw what happened when Dell of Dell Computers and his wife decided to put $6.8 billion into accounts for 25 million young people. They don't have to be 1, 2, 3, 4 years. Anybody under 18 can have one of these accounts set up. The government will put $1,000 in for 4 years for for people who are just born 1 year old. But this is something that parents will put money into, businesses will put money into for large, small businesses, and foundations, instead of hiring some think tank guru for $500,000 to tell you how to spend your money to help people, you can say, you know what you can do? you can put $1,000 into the account of every foster care child in the country, okay, as a way to build some wealth for them when they get old enough to leave foster care and otherwise would have nothing. So there are any number of ways this will change philanthropy in the country, and it'll also change the attitudes of 10-year-olds, 12-year-olds, 15-year-olds, 18-year-olds about how the stock market works, how the economy works. How much more curious will young Americans be about how you create wealth, how capitalism works, how freedom works, how free markets work, how taxes work? Gee, taxes are cut and my stocks go up. I got it.
I love it. It's a great concept, and I'm glad it's getting more attention this weekend. And it looks like all Americans under 18 can have such an account, right? You don't have to be born last week or whatever to get one, right?
No, if you're under 18, you can your parents can set up an account for you and put money into it themselves. The company they work for can, a foundation can. They can earn money and put money into it. I mean, there's any number of things that you can do here. Really, the idea, I think the important part about these, for 4 years, the government will put $1,000 in, is that, you know what, it gets the ball rolling, and there's easy for people to learn how to do it, and then it's just going to become part of what parents do, what grandparents do. I used to get underwear for Christmas from my grandmother. Maybe I could get some money in my 401k.
And then it was rainbows and ice cream cones after that. When you got the stock certificates too. Now, kids are going to learn about stocks and investing, and also, what about taxes? What about the tax aspect of this, if any?
Well, the money your parents put in is not tax deductible itself. That's after-tax dollars that they can put in, but then it builds up like an IRA. The money that the company puts in as a benefit is not taxed by the company. Because it's a benefit. It's not taxed as it would be if they were doing your health care. And a foundation is already not taxed, and so income there, money put in by a foundation would not be taxable. It would build up tax-free until you take it out, just like a 401k or an IRA, defined contribution pension. We will have the next generation will grow up with the idea that I have assets, not just a house, but stock assets, and they go up when the stock market does well. And the stock market does well when the government doesn't spend too much and doesn't tax too much and doesn't regulate too much. And all of a sudden, remember there was this discussion about $90 trillion that they were going to take from people for the Green New Deal, $90 trillion. Well, 15-year-olds in a few years will be able to go, where are you getting the $90 billion to do this stuff? For me, no. It'll change the world.
I was on a 10 freeway today in Los Angeles, and I was thinking, whatever happened to the money from that infrastructure bill, given the horrific condition of especially the road systems here in the Los Angeles area? Has that money been spent yet, the infrastructure bill money, and what happened to it?
Well, infrastructure is a French word meaning anything other than roads. They always tell you when they take your money, we're going to build roads, because people want roads that work, and they want more roads, and they want safe roads. And so politicians say, we promise to spend it on roads. And then they do anything except roads. So it's a sucker's term. We'll build your road. No, we won't.
Well, that explains it. Thank you for that quick explanation. Grover Norquist, President of Americans for Tax Reform. Grover, wish you a great Super Bowl weekend and look forward to speaking with you again next week. Thank you very much for taking the call.
Good to be with you. Thank you.
Thanks very much.
The UCLA men's basketball season's in full swing, and we need you to get to Pauley Pavilion to support the Bruins. Don't miss a single chance to see this year's exciting team, led by Donovan Dent, Eric Daly Jr., Sky Clark, and Tyler Bilodeau. Pauley Pavilion, presented by Westcon Financials, the home of the greatest tradition in all of college basketball. We can't wait to have you join us as the Bruins continue to build on that legacy. With big-time matchups, go to UCLABruins.com/tickets to secure your seats today before it's too late. Let's get Pauley rocking.
The CJ Pearson Show.
Every week, we'll take on the biggest cultural, political, and moral battles in America head on.
CJ presents the most passionate voices in the Black community.
When you're going around and talking to people in actual communities, you get to know what people actually care about.
As a Black man, why can't I be the first one in my family to graduate from college? Why can't it be me?
Yeah.
Shift the way that I think about the world.
Bold truth, real conviction, zero permission. This is the CJ Pearson Show.
The CJ Pearson Show. Follow and listen on your favorite platform.
Moteca Money continues your 790 KBC. The top story, it's Dow 50K today. The Dow Jones Industrial Average closing about 50,000 for the first time at 50,116. Was up 1,207 points today to 50,116. The S&P 500 popped 134 points higher, and the NASDAQ gained nearly 500. We did see auto stocks mixed today with the Ford moving slightly higher to 1380. GM also slightly higher at 84.24. Toyota Motor got a pop of more than 7 at 244. Volkswagen slipping 4 cents at 11.89. And Stellantis shares tumbling more than $2.26 to $7.28. The big news today from Stellantis is that they announced they'll take a $26.5 billion charge as Stellantis cuts back on EV production, like some of the other big names. Joining us live now is the one and only Lauren Fix, co-host of the Drive Car Show syndicated radio program, as well as founder of the Car Coach Reports. Looks like that was the big story in the car business today. Lauren, give us your reaction to this big news here. Stellantis, of course, the parent company of Chrysler, Jeep, Dodge, Ram, and the list goes on.
Yeah, they've had some interesting issues at Stellantis, besides the fact that they followed along with the government mandate of electric cars, and there was no pushback by any of the automakers. They all just went along with it because they were getting subsidies. And the result was lack of sales. And Stellantis not just had that issue, they had a big issue. They were the number one seller of plug-in hybrids with what they called their 4xe, so 4xe it said on the back of the vehicles. And they were selling Wranglers and Grand Cherokees, but then suddenly out of the blue, they pulled the plug on all of these plug-in hybrids, pardon the pun. But what was interesting about this is all these 4xe, which was their number one selling hybrid, is now gone. And the reason for that was they had battery fires, software issues, and engine issues. And that was enough for them to create a stop sale, which no one knew about. And all the dealers were having trouble with consumers coming in and saying, hey, the car's not running the way it's supposed to. What do I do? And they couldn't get in front of it. And then finally, it just disappeared with no notice from their website. So that plus all the electric vehicles that did not sell for the Stellantis brand, like the Fiat 500e and others, put them in a tough position. And so that's why you're seeing such a huge loss. And they're not alone. Ford had over a $20 billion loss. General Motors in their last quarter was a $7.1 billion loss. And all of these losses impact the economy, and it impacts jobs, it impacts the UAW, it impacts supply chains. And the result of that is car manufacturers listen to the federal government in trying to force you to buy something that consumers didn't want. I mean, in California, the electricity is one of the highest in the country. The only one that's higher is Hawaii. And you look at that cost plus forcing someone to buy an electric car, which buying a new car is expensive, plus the additional insurance and finding charging or having a charging station installed was not for the average consumer. And because consumers said, nope, we're not going to buy that, the result was losses for the big three.
Enormous losses. What does this ultimately mean now as far as manufacturing is concerned? Are they going to retool their factories now and go back to gas engines? Obviously, this is very, very big news for all the automakers.
Yeah, it's interesting. I just posted a story literally an hour and a half ago on my Car Coach Reports channel. California was pushing ahead with the all-EV mandate, even though the federal government said, no, we're not going to do that. You as a state can do whatever you want, but you can't force the federal government to do so. So what did Detroit do? They sent those same three companies, Ford, GM, and Stellantis, to California to negotiate a deal, which makes no sense after they took all these losses, and that includes in California where they just couldn't sell enough vehicles. I mean, consumers that want electric cars are looking at everything that's available. But when you have just these three automakers coming to California to basically get on their knees and beg not to be fined, because that's what Gavin Newsom was going to do, and God forbid he becomes president because he would try to make the whole country in this type of mindset, putting all these companies at a loss, they're still going to make electric cars. And other brands will too. And it's still going to be in the mix. I don't think they're going to go away. If you want an electric car, there are wonderful choices out there. And Toyota's got 2 vehicles coming out soon. The BZ is going to be new. I'll be driving that in Ojai next week, and also the CHR. And we have a big reveal coming up on Wednesday, so I'll be posting that on another electric product coming out of Toyota. So it's not to say that they're going away. It's to say there's going to be less sold. And when all these car brands were literally planning on every single thing in their lineup to be electric, they bit and they went in for it. And the result has been losses. And that is hurting the bottom line for every car brand.
All right. And, of course, there are dedicated EV brands out there, Lucid, for example, and Rivian, right?
Tesla. Yeah.
Tesla, of course, the big dog, but looks like Volkswagen's come up big in Europe as far as looks like they're outselling Tesla somehow in Europe. I just read that story, and I mentioned the stock quote on Volkswagen, which is also publicly traded here on the U.S. exchanges. But what about Tesla, and what about the other dedicated EV brands? For example, Lucid, I guess, has a new SUV out. Saw one of those the other day. Give us an update on what you're seeing out there.
Lucid is doing well. They had a huge influx of cash. They're producing product. Their history is actually much broader than people would think. They used to make all the batteries for Formula E, which is the racing cars. And so they do have a history of reliable vehicles that go a long distance. Tesla, of course, the big dog, owns over 60% of the market share and will continue to do so. But in the case of Volkswagen, they have lowered the price as low as they can. Their sales are so off in Volkswagen, especially in the electric lineup, and sales are just far from what they thought they would be, that they actually closed their plant in Dresden, which has never been closed in the history of the brand, but they closed it for 3 months. And that's a sign, because they were deciding to go all electric. And the number one employer for the country of Germany is Volkswagen Group, is the car industry. BMW, Mercedes, Porsche, all the brands that are under the Volkswagen Group. They were hurting so badly that they were laying people off, shutting down factories, reducing their lineup, and they're even talking about selling some of the brands that they have, because when they went all electric, they didn't realize that consumers didn't want it. Now, there is some interesting story that popped up, and I'll be reporting on this in the next week or two. It looks like the country of France doesn't care what you want, and they're going to start taxing people that own gasoline-powered cars, even if not just new, but if you have an older one. They're going to tax you more than the value of the vehicle, trying to force you out of that vehicle. And that's going to be a problem, because there's going to be a huge pushback. If you can't afford a new vehicle, what are you supposed to do? You can't go just buy something because the government tells you to do so. So I think there's going to be another big pushback in France. It's also going on in Spain. So while it appears as though Europe thought they could force people to go all electric, and it didn't work here in the U.S., we're going to start seeing a pushback from consumers in Europe as well. And even in China, they're still selling gasoline-powered vehicles, even though they claim they're all EV. They're still producing all kinds of power plants that are very dirty coal. They use natural gas, which is clean. They make nuclear power plants. They're everywhere because they don't have enough energy either. So again, this is a huge problem, to force someone to buy a product that they don't have enough energy to even charge it. Or is that really the plan to begin with, to limit your driving and make it so expensive that you can't afford to?
On your live with Lauren Fix. It is Super Bowl weekend. I'm sure we're going to see a lot of commercials this weekend, and probably a lot of car company commercials too. Lauren, any good deals with affordability being top of mind for everyone nowadays? Any deals out there that you spotted?
Well, I will tell you that Jeep did announce that they're not going to be doing a Super Bowl commercial. They haven't done it. They've been doing one for decades. They've always had something really good. I mean, they really have excellent advertising. But unfortunately, this year they said it's just too expensive. They're not making the money that they thought they would. So there will be a few brands that will have commercials. Many have pulled back. But as far as deals, remember, the deal is always at the end of the month. So if you're looking at products, great to go out and test drive, whatever it may be. But anything that's not being made next year, and there's going to be plenty of product there, or anything at the end of the month, that's where your deal is. So test drive now, get your relationships going, do your shopping. I have reviews on my Car Smarts channel of literally everything from an Aston Martin to a Mitsubishi, and figure out what works best for you. And then at the end of the month, that last week, that's when you make your deals, because you're going to have the most flexibility of financing. There's contests amongst the salespeople. They all are trying to sell cars and they don't want you walking out the door. So believe me, they'll be following up with, how do we get you in a car today?
All right. A lot of our listeners have a few bucks in their pocket now that the Dow is above 50,000. It's been quite a wild week, but at least for the Dow, a winning week. And looks like Bitcoin also rebounded from 60K to 70K. It's been kind of a stomach-turning week for a lot of investors. But on the high end, what vehicles have been catching your attention lately on the high end, Lauren Fix?
Well, I'm still a big fan of Porsche, and Porsche did announce, by the way, since they are under the Volkswagen Group window, that they're not going to build all electric cars like they had thought. They got too heavy outside of what Porsche was all about. I am a huge Porsche fan. I drive a Porsche Cayenne. It's one of those cars that will always sell. Also, Ferrari's got a new Amalfi out, so if you really got some money and you're looking to spend it, check out the new Amalfi. That's the replacement for the Roma. Beautiful car. And there's also other vehicles coming out from other high-line companies. Of course, you can always go Bentley or Rolls-Royce, depending upon whether you want performance or you want luxury.
All right, and then the good old Beetle. It's amazing how they have maintained their value, right, Lauren? And looks like the Volkswagen getting rid of the electric bus after just a couple of years.
I know, it's such a. I actually like the VW, the ID Buzz. It was a great vehicle. Just had shorter range than they planned. Everybody that wanted one, first question was, is there a range extender? In other words, does it come in a hybrid or some sort of backup? And it didn't. And until that comes to fruition, we're not going to be selling the Volkswagen ID Buzz here in the U.S. So if you're thinking about you want something fun, go take one for a test drive. It just won, not this year, but in 24, won the North American SUV of the Year. I really enjoyed the vehicle. I thought they did a great job with that whole throwback retro feeling.
Absolutely, Lauren. Well, thanks very much. We wish you a great Super Bowl weekend. Thanks so much for taking the call here. Lauren Fix, co-host of the Drive Car Show, as well as the founder of Car Coach Reports, live with us here on MoTech on Money and 790 KABC. Stay tuned now to the 790 KABC News Blitz with Randy Wang here on 790 KABC.
The UCLA men's basketball season's in full swing, and we need you to get to Pauley Pavilion to support the Bruins. Don't miss a single chance to see this year's exciting team, led by Donovan Dent, Eric Daly Jr., Sky Clark, and Tyler Bilodeau. Pauley Pavilion, presented by Westcon Financials, the home of the greatest tradition in all of college basketball. We can't wait to have you join us as the Bruins continue to build on that legacy. With big-time matchups, go to UCLABruins.com/tickets to secure your seats today before it's too late. Let's get Pauley rocking.